Scott, thanks for giving us part of your Tuesday. And I want to begin with the U.S. dollar. It's been a bit of a safe haven play. Certainly saw a little bit of a bid come into play yesterday, but for the most part, it still remains very much range bound amidst a Fed that's just kind of sitting on their hands right now and waiting for lawmakers to take the ball and run with it, it seems like.
Absolutely. And that 93 level seems to be almost like a magnet. And like you said, it's been very, very range bound. And I think that's also why gold, and I know you were just talking about it, why gold has had a little bit of trouble, getting any sort of rally as well. But yeah, the dollar has been range bound. And quite frankly, I'm surprised that it's not a bit weaker given all the Fed comments.
Well, and also, Scott, again, a very dovish Fed for the most part, but,
right.
Obviously the dollar didn't see it as too dovish. It held key levels at 91.70 area, I think is the big level to watch right now to the downside. Below that, we're talking 88. But you can also point to the fact that we're not seeing a lot of inflation right now.
Sure.
I mean, that could spark some movement in the dollar if we were to start to see some. But again, just a minute ago, we were talking about, it's not just here, we're talking Hong Kong, globally for the most part. There just hasn't really been, any.
No, there's really no growth anywhere. We've had some positive signs here and there and, a little bit of optimism, but you're right. There's really no inflation. And, quite frankly, the Fed coming out and just saying, listen, we're going 2.5, 3 years here. And we know, with, I'm not going to say 100% certainty,
right,
but with all close to that we're not raising rates and that inflation is just not happening. That's the news out there. And that's why I think that the dollar has stayed in this very, very tight range, but I'm still surprised that it's not a bit weaker.
Yeah, well, we'll continue to watch that. Let's talk a little bit about the Japanese yen because it has strengthened a little bit. We've been seeing it bid, oftentimes looked at as a safe haven type asset. Tendencies tend to favor that. Let's talk about what is the recent bid we've seen telling you, because we took out a key level in the Japanese yen. I want to just point out, if we could just take a look at this chart, yesterday we traded up above the July highs that we saw that spike up into the 9,600 level. Now, we pulled back a bit this morning. We're slightly higher, though. But what's this telling you to see this recent bid over the last 6 or 7 days that we've seen in the yen from 9,400 up and through the 96 level?
Yeah, that maybe they're picking up a little bit quicker than we are here. And the uncertainty that we're seeing in our markets. And I think a lot of that is because of the election and that safe bid, that safe haven, if you will, especially with gold not really moving and being extremely range bound, maybe a little bit on the bearish side, not even on the bullish side. The yen really is that the next world safe haven currency, and you're seeing that reflected there.
Yeah, maybe again some of that bid coming into play, as you mentioned, in the yen, not so much so in gold. Feeding into ahead of some of the uncertainties. Let's talk a little bit about UK-EU relations as well, Scott, because this has been weighing on the British pound right now. They're headed into this negotiation, headed into this deadline still, it feels like, in the negotiation process. But we've been watching the British pound weaken a little bit as well. And I guess how much are you focusing on some of the selling there?
It's not at the top of my list. And maybe it should be, Ben, but I think we've all become pretty callous to the situation, quite frankly. And, this has been going on for 2.5, 3 years. And my expectations are, okay, if they don't get anything settled, they're just going to extend the deadline again. And maybe that's not the right thinking, but that's kind of what we've been accustomed to. So I'm not as concerned about that. And I think there are just bigger fish to fry at this point.
Kick the can down the road type mentality.
Exactly.
It sounds like. Yeah, let's talk a little bit about the weekly time frame here. I just want to pull up this chart. This is an interesting look at some of the price activity and that recent test that we just came off of. Take a look at how it was just a retest of the 135 area. Scott, it does look like they've failed and had some issues with this level recently. So maybe just more of this kind of range-bound type price activity. A lot of focus here on Fed Chair Jerome Powell today, Scott. I know the testimony was already released, but you always have that rogue possibility for something to be revealed in terms of the Q&A session, and there will definitely be a lot of attention being directed towards that. Maybe more so for you, a focal point today than some of the weakness in the British pound and some of the other currencies, the price activity there.
I just think it's really surprising with the comments last week, and we're probably going to hear more out of Chairman Powell today. The same thing that they can really predict 2.5, 3 years down the road, and to me, what that really says is maybe the economy is a little bit more in trouble than we kind of are catching on to believe here. And the fact that inflation, the new benchmark, the new barometer, if you will, that we don't really have a chance of getting there in the near future, that's a little bit concerning to me. So I actually think that Powell may pull back a little bit on some of the rhetoric last week, because I think he really put a big question mark into the marketplace, not just on what the Fed plan is now, but maybe the health of the economy. And I would kind of expect him to walk that back a little bit.
Yeah, I've been saying they've been providing a fair amount of transparency, but not a lot of clarity, at least in terms of how they're going to achieve some of their goals that they've mentioned. Scott, let's talk about what this all means for treasuries and rates. And ultimately, we mentioned how there's not zero, but no real inflationary concerns that are impacting the U.S. dollar. We mentioned how the Fed, again, expects to see rates lower for longer. What does this mean? Treasuries very much range bound as well. You got the 10-year, which is like teetering right around the 50-day moving average.
Right. They have to stay range bound. I wouldn't expect a big move one way or the other. Maybe we break out of that 50-day just a little bit, but you're right. This range that we've been in, what is going to be the catalyst to get a big move one way or the other? I mean, the market has really accepted what the Fed has said. And unless there is some rhetoric from Powell and maybe some of the other, Fed speakers that we're going to see this week, because we're going to get a lot of them.
Yeah.
Unless there's something to really indicate a difference, a change in what is going on, I don't see rates really changing too much here.
Yeah.